So what I'm watching right now, we are seeing short-term bullish order flow on the hourly chart. Fair value gap support, 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 and it's actually leaving some of these imbalances open, signaling short-term strength. So if we start to see continued bullishness to the upside, my attention goes to this high here, which is relatively equal to this one, but this one's slightly higher, so we'll use this one. And then through that, we have the pre-market highs from the previous day. And if we really start to punch through those buy-side liquidity pools, then we may even trade all the way down, or all the way up to, rather, the new week opening gap. That's just a consideration right now. That will only hold true if institutional order flow and market structure remains bullish on the hourly and the 15-minute time frame. Dealing range low, dealing range high on the 15-minute chart. Market trades with a discount of the dealing range, clears out the sell stops. Energetic move away from discount valuation, right? So we're seeing strength right now on the hourly and the 15-minute chart. So if we find support inside this 15-minute fair value gap here, let's make that blue. Find support inside that 15-minute fair value gap. My attention goes to the buy-side liquidity here, London highs, and then the buy-side liquidity pre-market session highs. Through that, we have the London highs from Monday's trading. And then above London highs, my attention goes into this new week opening gap here. All right, so about 30 seconds till we get into the 9:30 open. So as of right now, the market structure looks poised to trade higher. Again, dealing range low. I'm going to repeat this again. Dealing range low, dealing range high. We've already traded into a discount here of this range and taken out the sell stops. So if we're going to remain bullish, this should be an intermediate term low and should not be taken out. That's how we're looking at this fair value gap here. And the reason that fair value gap more specifically is because there's a bullish breaker here, right? Low, lower low. Find the highest up close candle in that swing. Extend that through. That's your bullish breaker. So breaker with a fair value gap here. I want to study, does that lend support here going into the 9:30 open? All right, so now we're trading deeper into that fair value gap. So I'm watching that fair value gap here and this breaker block. Does the market find support or do we trade through it, right? Because if we trade through it, then that would give me different insight going into the session. All right, so they dropped it into sell side here, relatively equal lows here and here. Let's study, do they reject those lows? We also have SMT divergence here. S&P did not take out the sell side. NASDAQ did. So let's see if the SMT holds. So small little fair value gap here. First FEG. First presented gap here on S&P. Trading down into it, finding support, body staying in the upper half, buy side up here. Same thing for NASDAQ. See NASDAQ drop down. Yeah, it traded outside of it a little bit, but it's still doing what? Staying in the upper half of that 15-minute gap. So now for NASDAQ, buy side here, and then that 15-minute high that we framed here. S&T divergence was good here, right? So we have S&T. Take a moment to touch on S&T, right? Why is this S&T helpful? Well, for two factors, right? You guys know how to use S&T, and there's that 213 signed, sealed, and delivered. The reason why S&T is important to me is because I know where the market's likely to draw to, higher. I know the key level I want to see it turn from, which is this 15-minute fair value gap. So when I have the drawn liquidity and then a key turning point where I expect the market to turn from, that's where S&P is going to be really important. And then look at S&P not making a lower low, signaling it's under heavy accumulation of longs. And NASDAQ is just trading lower to run out the sell stops. And look at the explosive price run. Bam. All right, so we have a 5-minute fair value gap here for S&P. And same here for NASDAQ. I got a pretty poor fill there, but I'll take it. So I wanted to get long inside that inversion fair value gap. Pretty bad fill there, though. Sorry. I'll work with it. So looking for the draw, this 15-minute high here. I'm going to trim some risk here now that the market's taken out that high. We don't want to see it dive back down to the range. We want to see speed through that now. All right, so 5-minute chart here. We got this 5-minute candle that just opened, retracing lower, hitting this down close candle. That's fine. Let me take this off the 5-minute chart. 5-minute candle, this down close here. We want to see this act as a bullish order block. So it's okay for this 5-minute candle to open, drop down into it, use it as support, but we want to see it quickly leave and expand, work higher. Inversion fair value gap, market drops down into it. Look at the bodies stopping on a dime. That's exactly what you want to see. Stop rolls to break even now. And I'm gonna let this thing keep running. See if I can get 10 points out of this baby here today. So you see what we were saying here on that 5-minute chart, right? When this was a black candle, it's easy to get scared, right? When you're seeing that kind of thing. But if you know your PD arrays, this is a down close candle. When institutional order flow is bullish. So this should do what? Acts as a bullish order block. Drops down, hits it. That's going to be accumulation. And then they send it higher. Smooth as butter. Yannick, really appreciate that comment you just said. I did feel some FOMO when it starts going up, but I'm happy I was able to wait too. Absolutely, Yannick, it happens to us, right? And how do you think I learned to be patient? Losing my fucking ass, right? Seeing this thing run higher like this, have no idea what I'm looking for and say, oh yeah, let me just buy this fair value gap here. And then I'd have my stop loss down here. And then it'd retrace and I'd say, well, everything's still valid. So I'd take my stop loss that was here and I'd do the number one sin in trading. I'd have a stop loss here. I'd say, you know what? Well, I see it's just going to retrace to a discount. So let me move my stop here. Stops me out. And now I'm taking a huge loss because I got a poor entry. I chase price and I'm gambling in an undisciplined way. And then I move the stop loss, which is the number one sin in trading. And I would just do all types of ridiculous shit. But over time, getting smoked teaches you, okay, well, just wait for that discount. And if it keeps running, so what? You missed the trade. We'll be back at it tomorrow. We'll frame another setup just like this. Easy money. But you have to be able to stay disciplined, stay patient. So once the market dropped down, traded into a discount of the range, this fair value gap here, we're bullish. So we're not looking at this as, oh, shift in market structure, fair value gap, this thing should go lower. We're looking for it to trade above it, inversion fair value gap. Watch the replay. As the market's printing up through this here, I'm already labeling this an inversion fair value gap. I'm loading up my contracts on all my accounts. I'm getting long. I got a really shitty fill on this account here. Getting filled outside of that inversion fair value gap. I don't really like that. Would have liked to have gotten filled inside that range there, but it is what it is. So that was the trade right there. That's what we were looking for. Showing you guys again the draw liquidity, top-down analysis pre-session, and then you see how we execute on that when it comes time to expect these expansions to be delivered at time of day, right? The other thing I wanted to mention as well, today's a perfect example of not needing to chase price, right? If the market runs off without you, wait for it to retrace, right? One of the things that I always say and that I always use in my trading is only do business at the levels you want to do business at. Don't let the market take you out of your game and force you to buy an expensive market or sell a cheap market. Let the market come to you and transact at the levels you want to do business at. Because if you don't do that, you're going to be caught chasing candlesticks up and down all day long, and you can't make a trading career gambling like that. I tried for a long time until I finally got my head on screwed on straight and figured out what I needed to do and how I needed to do it. So my goal is to help you guys through that, shorten that learning curve for you guys as much as possible by sharing these insights with you, sharing with you guys how I would fall victim to it, right? Yannick, as exactly as you just mentioned, early on, I would be extremely emotional watching this go up and down, right? I could see the draw on liquidity, see it's wanting to trade up into here, but I'd have no discipline to actually wait for my models to form. I wouldn't wait for a discount market, right? I wouldn't wait for a run on stops, things that I look for. And it would just be chaos in my trading. But the more simple I made it, right? If I'm bullish, I'm doing one of two things. I'm waiting for the market to run out sell stops. Well, it didn't run out sell stops here, Dylan. Yeah, but the NASDAQ did, right? And then as I taught in the as I shared with the SMT teaching, right? I taught how to use it on the higher time frame with the weekly key level and then hourly. But the logic is the same top down. If the market's bullish, I'll cover that again, and we have that 15-minute fair value gap that we're expecting the market to trade higher from, right? Which is this 15-minute gap down here. So this is a key point of interest that we're expecting the low of the data form for the market to then expand higher. So if we anticipate that, we want to see this crack in correlation here, which confirms that, yes, S&P is under accumulation of longs. This is just a stop hunt on NASDAQ. But it's more about the context. It's not about just looking for S&P, because if you look for S&P, there's actually S&P everywhere. There's actually an S&P even here at the highs. Look, S&P took out this high, NASDAQ didn't. Why am I not worried about that S&P? Because I'm focused on S&P as a confirmation tool. By itself, S&P is not that effective from my experience. S&P works magic when you know where the draw is and you know where you expect that turning point to happen. Then if you get S&P there, oh my gosh, man, do you have a setup unfolding? And then again, just exploded off without me. Had to wait for the discount there, but nonetheless, still able to get what I was looking for.